Good afternoon. We'll call the hearing to order. Next Tuesday, April 15th, Americans are going to once again file their income tax returns. And for small business owners, tax day is yet another reminder of how many burdens there are in the tax laws. They bring a never-ending parade of higher taxes, increased complexity, and an ever-changing regulations. If you talk with small business owners often, as members of this committee do, you know that individually they may be affected by one particular part of the tax law or another. But taken together, small business owners consistently tell us that they are impacted by higher taxes, new taxes, increasing tax code complexity, uncertainty, and the additional time required to resolve the issues with the Internal Revenue Service. All this means they have little ability to plan with confidence, and that leaves less time to grow their companies. One tax preparer for small businesses recently called this cumulative effect death by 1,000 cuts. And we know that small businesses face unique tax challenges because research has shown that it is more costly and time-consuming for small firms to comply with the tax code. But while most Americans may think about taxes once a year, entrepreneurs cope with multiple tax issues each day in operating their businesses. In connection with today's hearing, the National Small Business Association is releasing its annual tax survey of small businesses. The survey confirms that entrepreneurs are spending scarce resources on federal tax compliance. About 49% are spending $5,000 or more per year on tax compliance, and that's not including the taxes that are owed. 40% more spend more than 80 hours per week dealing with federal taxes, and 86% pay an external tax preparer to handle their taxes. The overwhelming majority, 73%, said federal taxes have a significant impact on the day-to-day operation of their businesses. We're going to hear more about the survey results shortly from Tim Reynolds, who's one of an SBA's members. Today, we hope to learn more about all of these tax issues, and I want to thank all of our witnesses for being here, and we look forward to hearing your testimony. And I now turn to Ranking Member Velasquez for her opening statement.
Thank you, Chairman Graves. With April 15th just around the corner, most Americans are wrapping up their paperwork. Yet, for many small business owners, the process never really ends. Constant changes to the tax code make compliance a year-round challenge for small employers. This is not the first time our committee has discussed tax challenges facing small firms. The Small Business Committee has held numerous hearings examining how specific provisions like bonus depreciation and the state tax affect entrepreneurs. Yet, the most frequent complaint we hear from small employers is how our current tax system creates uncertainty, hindering long-term business planning and growth. This uncertainty is a product of a complex and outdated tax code. As we all know, complexity adds significantly to the cost of tax compliance for small firms. Modernizing this system will provide simplicity, fairness, and predictability to businesses of all sizes. That is why I'm glad that the Senate has taken measures to retroactively extend almost all 55 extenders that expired last year. Now we must give small firms some certainty that they will operate under this rule for the foreseeable future. More broadly, tax law operates best when small businesses have long-term certainty and stability. This is why fundamental tax reform is imperative. One tax reform goal should be promoting growth and job creation. Small businesses are a vital part of that equation. Too often, entrepreneurs' tax reform priorities are drawn out in the larger debate. I expect today's discussion will yield recommendations that will be helpful as we work together to improve the tax environment for small firms. Although some existing tax policies provide critical relief to small firms, much of the code is riddled with inequities and unnecessary complexities. For small entities, this creates obstacles to success rather than encouraging economic growth. It is important we continue working toward a comprehensive overhaul of the tax code rather than a corporate-only approach. Doing so supports our nation's job creators by allowing them to continue hiring and expanding without worrying about annual changes. Most importantly, any agreed-upon plan must ensure the extension of critical business expenditures. One critical provision is enhanced business expensing, sometimes called Section 179. The majority of small firms we have spoken to insist that this specific item must be retained. It encourages small entities to make purchases now while also putting more money in their pockets to invest and hire. One thing is clear about tax reform: small firm needs must come first. No matter the approach taken, the small business community wants their voice to be heard. We cannot move forward without their input, and we must recognize the impact of how any proposals will affect them. I believe there exists an opportunity to implement long-lasting reforms. Doing so will have immediate benefits to small businesses. With that, I just want to take this opportunity to thank all the witnesses for being here today and providing insightful information regarding the tax code and small businesses. Thank you, Mr. Chairman.
All right, our first witness is David Carter, who's the Managing Director of Kogod Tax Center at American University here in Washington, D.C. The Kogod Center provides research on tax problems of small businesses. Previously, Mr. Carter was the National Director of Tax for Ernst & Young. Thank you for being here.
Chairman Graves, thank you very much. Ranking Member Velasquez and members of the committee, thank you for the opportunity to testify today. My name is David Cotter, and I am the Managing Director of the Kogod Tax Center located at American University. The Kogod Tax Center is a tax research institute dedicated to nonpartisan research on tax matters affecting small businesses, entrepreneurs, and middle-income taxpayers. I've been a tax practitioner for over 40 years. As the Chairman mentioned, prior to joining the Kogod Tax Center, I was Director of National Tax for Ernst & Young. Over the course of my career, I've watched with great disappointment as the Internal Revenue Code has grown increasingly complex in its structure, incomprehensible in its nature, and pervasive in its effect on business decision-making. There's little doubt that the nearly paralyzing complexity, overwhelming length, and constantly changing nature of our federal tax laws are having a profound effect on small business decision-making and impeding their ability to grow and create jobs. Based on surveys we've conducted over the past 3 years, discussions with small business owners, and personal experience as a tax accountant, it's clear to me that the two biggest tax problems facing small business today are, one, complexity, and two, the constantly changing nature of the tax law. These two forces show up in many ways, but there are 7 particularly critical problems they are creating for small businesses today. First and foremost, most small businesses have given up trying to understand the tax law. They've outsourced their tax planning and their compliance. It's estimated that close to 91% of all small businesses hire a tax return preparer at a cost of around $16 billion a year. Second, because the tax laws change so often, small businesses are making decisions without full knowledge of their economic consequences. According to our surveys, the single most important area of tax uncertainty for small businesses involves that mentioned by Ranking Member Vasquez: how much equipment can be immediately deducted and what has to be depreciated. These rules need to be settled. Third, constantly changing tax laws mean constantly changing tax filing requirements, which means constantly changing record-keeping requirements, which means constantly growing uncertainty, inefficiency, and frustration. The number one factor cited in Kogod Tax Center surveys as contributing most to increased cost is the constantly changing rules and regulations. Fourth, increasing tax record keeping, tax compliance, and tax reporting requirements are diverting increasing amounts of time away from operating and growing small businesses. Fifth, internal costs. Despite spending $16 billion a year on outside tax return preparation, it's estimated that annually small businesses spend more than 2.5 billion hours of their own time on federal tax matters. This is not a healthy state of affairs. Sixth, tax compliance is becoming a year-round activity, requiring more interaction with the IRS. Yet many small business owners say it is difficult to get answers from the IRS, and solving problems takes more time. Finally, there are several specific areas of the tax law that are particularly challenging for small businesses. The top 6 are the rules governing accounting methods, depreciation, inventory, employee independent contractor determinations, the health care law, and retirement plans. Simplification of these rules is critical. Given all this, I'd like to put forward 2 proposals. They won't solve all the problems of small business, but they will help a lot when it comes to taxes. The first is called the Simplified Cash Method. This proposal would allow businesses with up to $10 million in revenue to immediately deduct all amounts they spend to run their business. That would include amounts they spend for inventory, capital equipment, wages, materials, supplies, everything. You could think of it as a checkbook method of accounting because taxable income would be based on cash received and cash paid. No inventory rules, no depreciation rules, no capitalization rules, just cash flow. It's simple and it could work. My second proposal is not so much a simplification proposal as an equity proposal. It makes little sense to me that corporations are taxed at 35% and small businesses are taxed at rates as high as 39.6%. My proposal is that all business income be taxed under a single business tax rate schedule, no matter whether it's earned by a sole proprietor, a partnership, or a multinational corporation. It could be a graduated rate scale, but I would propose that it be the same rate scale for all business income. This could be easily implemented because small businesses already report the information needed to compute tax on a unified business tax rate scale on their existing tax return. Mr. Chairman, that concludes my prepared remarks. Thank you for allowing me to testify today, and I'd be delighted to answer any questions.
Thank you very much. Our next witness is Tim Reynolds, who's the president of Tribute, Inc. in Hudson, Ohio. Prior to purchasing Tribute, Mr. Reynolds held several positions with British Petroleum and BP America. He's the first vice president of the National Small Business Association, and he's testifying today on its behalf. Thanks for being here, Mr. Reynolds.
Good afternoon. I'd like to thank Chairman Graves and Ranking Member Velasquez and the members of the Small Business Committee for inviting me to testify today. I am Tim Reynolds, owner and president of Tribute Incorporated, software company located in Hudson, Ohio. Our 38-employee company develops and markets software for industrial distributors. We provide a fully integrated distribution management system supporting virtually all of the distributors' business system needs. I'm proud to be here representing not only my own company, but also the National Small Business Association. NSBA is the nation's first small business advocacy organization. NSBA is uniquely member-driven and staunchly nonpartisan organization. I serve as vice chair. I'd like to focus my remarks this afternoon on two of the major themes that emerged from a recent survey of our members at NSBA: the need for consistency and the importance of predictability. Our 70,000-page tax code has become disorganized by its own complexity. This complexity has real-world implications. Nearly 1 in 3 small businesses spend more than $10,000 per year on the administration of federal taxes. This is just the accounting fees and so on before they pay their tax liabilities. This money would be better spent toward hiring a new employee or growing the business. The tax code is a patchwork quilt of internally inconsistent and often conflicting measures and objectives. For example, as a software development company, Tribute spends a significant amount of time, money, and resources each year on research and development. As such, we are entitled to take advantage of the R&E tax credit, which can produce significant tax savings and allow innovative companies such as mine to increase their R&D efforts. However, because we are a sub-S corporation, like the majority of small businesses, the income of the business passes through to my personal income taxes. I am almost always subject to the alternative minimum tax. This effectively prevents my company from taking the R&E credit. Small businesses are often America's greatest innovators, and yet the complicated tax code steps on its own foot in this area. Even if I wanted to take the R&E tax credit, I can't, because on December 31st of last year, it expired, along with 55 other tax provisions commonly referred to as tax extenders. 73% of our members report using one or more of these incentives. While most of these tax incentives have been extended several times in recent years, it often has been done retroactively and in a rushed manner, leaving many small businesses scratching their heads on how to plan for the upcoming year. By Congress continuing to further delay the extensions, it punishes our work, investment, risk-taking, and entrepreneurship. Another important example of this problem is the uncertainty around Section 179. 179 expensing is of vital importance for smaller firms, particularly those involved in more capital-intensive industries. More than 1 in 3 NSBA members take advantage of this break, as it encourages small businesses to invest in new equipment by letting them expense much of the cost up front instead of depreciating it over time. For Tribute, it has its largest impact on my sales. The software we sell is typically my customer's second largest investment, behind only that of their inventory. And as such, it's eligible for the benefits allowed under Section 179. This deduction is often the difference between affordable and not, and our customers often plan several years in advance for this very significant purchase and implementation. The annual termination, change in limits, and delayed extensions of this and other tax extenders disrupts this planning, interferes with business efficiency improvements, and harms the economy, both for buyers and sellers of capital goods. In conclusion, the complexity, unpredictability, and inconsistency within the tax code pose a significant and increasing problem for small business. The ever-growing patchwork of credits, deductions, tax hikes, and sunset dates is a roller coaster ride without the slightest indication of what's around the next corner. The tax code is unfair to small businesses, biased against savings and investment, and impossibly complex. We need a tax system dedicated to investment, savings, and small business growth. Again, I'd like to thank Chairman Graves and Ranking Member Velasquez and the members of the Small Business Committee for the opportunity to speak today. I'd be very happy to answer any questions that you would have.
Thank you, Mr. Reynolds. Our next witness is Rick Andres, who is the president of Washington Network Incorporated in Alexandria, Virginia. Mr. Andres founded his company in 1987 to design and implement computer network systems for small and medium-sized businesses. He's testifying today on behalf of ASC2 Group. Thanks for being here.
Great. Good afternoon, Chairman Graves and Ranking Member Velasquez, and distinguished members of the committee. I'm Rick Andres. I appear on behalf of my company, the Washington Network Incorporated, and a member of the ASCII Group, which is the nation's oldest community of small and medium-sized IT companies. Well, thank you for holding this hearing on tax issues that face small business and gives me the opportunity to share my company's experience with the tax code. Now, this topic resonates with me because of its increasing complexity of the tax code and the difficulty we have in complying with it. These are challenges that we small business owners face on a regular basis. Now, my company, the Washington Network, is an IT consulting firm that installs and supports computer systems and computer networks, telephone systems in businesses throughout the Washington, D.C. area. And during our 27 years in business, we have provided IT technical support to hundreds of companies and employed dozens of people. Yet I have found that the complexity and of the tax code has had a very negative effect on both my firm's growth and my hiring ability. This is true even for areas of the code that were meant to stimulate job growth. Tax credits designed to help businesses like mine often go unused because of the time and cost required to take advantage of them. Now, I should point out that I'm not a tax authority, I'm not a CPA, nor do I wish to be, but I am sitting before you today just telling you a few tales from the front lines of business, describing some of the skirmishes that I've had with the tax code. The first skirmish was with the Veterans Hire Tax Credit, which encourages us to hire unemployed veterans. Now, it's a really worthy incentive, and however, this little-known credit takes a number of billable hours to comply with, and then if you don't file its Form 8850 within 28 days of hiring the veteran, you are disqualified from the credit. Now, this unrealistic compliance time frame makes pursuing the veteran hire credit really unworkable, and so we have to pass. Not that we wouldn't hire veterans, but we wouldn't take advantage of the credit. Now, the small employer health insurance credit in its 10-page Form 8941 is my poster child for needless complexity. The amount of information that I have to assemble to even see if I qualify for this credit is mind-boggling. In 2007, the IRS calculated over 30 hours to comply with this credit. In tax year 2013, they said it would be less than 15 hours. Now, my accountant can do it in 10 hours. But why would I pay him $1,500 for a $500 tax credit? Why not just say if you're a small business under 25 employees and you hire, and the people you hire, you supply health insurance for them, you give a 10% credit. That's easy to understand, and the credit would help. But when you study the form, the pages of complexity, you realize it's the term Rube Goldberg comes to mind, which is a very complex machine that you put $1,500 into and $500 comes out the bottom end. The only beneficiaries of this credit are the accountants. Now, if you're a subchapter S corporation like my company is, the tax code does not allow keeping any retained earnings in the business, which can be used for a rainy day or to fund future growth. This is a capital formation disincentive. Doesn't make any sense. There needs to be a portion of the K-1 that is not taxed at the highest rates. There are unintended consequences in the tax code that have a chilling effect on the employees and the number of employees that I will hire. Although our employee count is varied over time, we never plan to grow beyond 30 employees in an effort to stay under the regulatory and tax code radars. I know a number of companies have taken a great deal of time and money to split their companies in two to avoid headcounts over 50. The money that they have spent to avoid these punitive thresholds adds nothing to these companies' ability to improve their products or increase their competitiveness. So as you can see, because of the punitive tax code, I have to siphon off vital time and capital out of my company simply to comply. From my experience, if we had a simpler, less complicated tax code, it would allow an entrepreneur, such as myself, to invest more of my time, more of my resources into the company to grow the business and create more jobs. Thank you.
Yes, it is my pleasure to introduce Dr. Donald Maron. Dr. Maron is the Director of Economic Policy Initiatives at the Urban Institute. Since joining the Urban Institute as Director of the Urban Brookings Tax Policy Center, his work has focused on tax reform and America's fiscal challenges. He has previously served as a member of the President's Council of Economic Advisors, Acting Director of the CBO, and Executive Director of Congress Joint Economic Committee. Welcome, Dr. Maron, and thank you for being here.
Great. Thank you so much. Hi, everybody. Chairman Graves, Ranking Member Velasquez, members of the committee, thank you for inviting me to appear today to discuss the tax challenges facing small business. America's tax system is needlessly complex, economically harmful, and often unfair. Despite recent revenue gains, it likely will not raise enough money to pay the government's future bills. The time is thus ripe for wholesale tax reform. Such reform could have far-reaching effects, including on small businesses. To help you think about those effects, I'd like to make 7 points about the tax issues facing small business. First, as everyone on the panel here has mentioned, tax compliance places a large burden on small businesses, both in the aggregate and relative to large ones. The IRS estimates that businesses with less than $1 million in revenue bear almost 2/3 of business compliance costs, and compliance costs are much larger relative to revenues or assets or any measure of firm size for small firms and for big ones. Second, small businesses are also more likely to underpay their taxes. Because they often deal in cash and engage in transactions that are not reported to the IRS, small businesses can understate their revenues and overstate their expenses and thus underpay their taxes. Some underpayment is inadvertent, reflecting the difficulty of complying with our complex and ever-changing tax code, and some is intentional. High compliance costs disadvantage responsible small businesses, while the greater opportunity to underpay taxes advantages less responsible ones. Third, as also mentioned here, the current tax code offers small businesses several advantages over larger ones. Provisions such as Section 179 expensing, cash accounting, graduated corporate tax rates, and special capital gains tax benefits benefit businesses that are small in terms of investment income or assets. Fourth, several of those advantages expired at the end of last year and thus are part of the current tax expenders debate. These provisions include expanded eligibility for Section 179 expensing and larger capital gains exclusions for investments in qualifying small businesses. Allowing these provisions to expire and then retroactively resuscitating them is a terrible way to make tax policy. If Congress believes these provisions are beneficial, they should be in place well before the start of the year so businesses can make investment and funding decisions without needless uncertainty. Fifth, many small businesses also benefit from the opportunity to organize as pass-through entities such as S corporations, limited liability companies, partnerships, and sole proprietorships. These structures all avoid the double taxation that applies to income earned by C corporations. Some large businesses adopt these forms as well and account for a substantial fraction of pass-through economic activity. Policymakers should therefore take care not to assume that all pass-throughs are small businesses. Sixth, tax reform could recalibrate the trade-off between structuring as a pass-through or as a C corporation. Many policymakers and analysts have proposed revenue-neutral business reforms that would lower the corporate tax rate while reducing tax breaks. Such reforms would likely favor C corporations over pass-throughs, since all companies could lose tax benefits, while only C corporations would benefit from the lower corporate tax rate. Finally, tax reform could shift the relative tax burdens on small and large businesses. Some tax reforms would reduce or eliminate tax benefits aimed at small businesses, such as graduated corporate rates. Other reforms, for example, lengthening depreciation and amortization schedules for investments or advertising, but allowing safe harbors for small amounts, would increase the relative advantage that small businesses enjoy. The net effect of tax reform will thus depend on the details and may vary among businesses of different sizes, industries, and organizational forms. It also depends on the degree to which lawmakers use reform, a much-needed opportunity, to reduce compliance burdens on small businesses. Thank you. I look forward to your questions.
Thank you all very much. We're going to start questions with Mr. Hanna.
Mr. Maron, you mentioned vaguely the underground economy. How do you have you done any, has anyone here done any measurements on what that might look like, knowing that complexity, cost associated with complying, all of those things are a very direct incentive for people to run their businesses under the radar as much as possible. I'm curious. There are other countries around the world that have huge problems with underground economies, and yet they still have lower rates than us. But maybe, Mr. Maron, you could talk about that a little bit, or anyone.
Certainly, I'm happy to take first crack. The IRS periodically does studies where it tries to estimate the size of the tax gap, and one of the things that they try to include in that is the informal economy. If you think about it, the informal economy in broad strokes has two pieces to it. One is otherwise legitimate activities that people may do on a cash basis in order to avoid taxes. Right, the canonical example would be a contractor that you pay in cash rather than having anything that's traceable. But then also caught up in that are things that are, the illegal parts of the economy. And obviously one would, I think, feel about them quite differently from the legal parts. Other nations face similar problems. As you say, they often have lower rates. In part, that's because we as a nation focus quite heavily on income taxes as a basis for our overall tax system, while many other nations have things like value-added taxes. They raise some different compliance issues, but often allow them to have...
value-added taxes tend to be more efficient and more collectible, if you will?
So value-added taxes tend to be a more efficient way of raising tax revenue, and I think that's one of the reasons why you see nations that have larger governments tend to rely on them for a significant portion of revenues.
Because it's harder to escape. Do you have an estimate on the size? What's the last estimate you saw by anyone on the size of the underground economy? The reason I ask that is there's a lot of class conversation about, who makes a lot of money and how much they should pay, and I'm not weighing in there for the moment, but there are also the possibility there are a great many people who should pay something who are paying nothing, and that's equally unfair. And I know we're making the problem worse, but the burden falls on the people that are in your businesses. I was in business for 30 years. I strived to be legitimate, paid everything I had to pay legally, and there is within that, I say personally, you begin to have a certain resentment when you look around you and so many people are working in cash and employees are working under the table and that kind of thing, and you see it growing because we're actually incentivizing it. Anybody want to talk about that?
Well, Congressman, I'll respond to that briefly. At one point, I tried to find any data on how much non-compliance is intentional and how much is unintentional. It doesn't exist. I think a lot of the mistakes that are made, the tax gap, are people that genuinely want to comply but can't figure it out. And second, the Taxpayer Advocate Service recently did a study on small business and underpayment of taxes, and one of the critical factors that the Taxpayer Advocate Office found is norms, that different parts of the country have different cultures. And when you get a small business culture where folks are complying, other small businesses tend to comply.
Sure, and I'd like to say, too, that people whose W-2s are reportable and they can't avoid it, I mean, they're really the victims in this. I know as a business guy, you have opportunities with depreciation, all the things that we talked about, to kind of move things around legally. But yet, the people like a school teacher or someone who works in any job, right, they have none of those capacities. Well, that's right. They're not breaking the law. That's a good thing. But it's not just unfair to upper class, middle class people. It's unfair to reporters and to people who report and have no choice. And I wonder if, anecdotally, if you hear what I do on the ground, and people are just sick of it.
I do hear that, frankly, a lot at the tax center, and you know, when it comes to information reporting, the percentage of wages that are reported is over 99%, because the IRS gets a W-2, usually gets it electronically,
or
and
1099 or whatever it is.
And the 1099 is very high as well. It's in the 90s. It's the transactions that aren't reported that tend to create the gap.
So if you just yes or no, I'm going to run up my time, but if you had a chance to look at the Ways and Means, Mr. Camp's proposal, it's a great attempt at kind of cleaning out a lot of things. It's a starting point, right?
I'd say that it is. It broadens the base and lowers the rates. It is not simple. I mean, it is not simple.
Not as simple as what you talked about when you opened up. Yeah. Thank you. My time's expired.
Dr. Maron, there has been a movement away from organizing C corporations in favor of pass-through entities. Today, corporate tax revenue makes up less than 10% of our federal revenue. What is it about pass-through entities that make them such an attractive business structure?
Oh, well, I suppose I should lead off by saying that I think in my time I myself have formed 3 of them. And one thing that's very attractive about them is just how easy it is relative to other forms. In particular for myself, setting up an LLC, you know, there is some paperwork involved, but relative to the standards of setting up a C Corp or something, it's very simple. You can get in business quickly. And then another major thing is the tax treatment, that the ability to be structured as a pass-through, pay the taxes on your individual income tax, and thereby avoid the double taxation of the corporate tax is very attractive and very beneficial for small businesses.
Thank you. Mr. Cotter, it is pretty hard to argue, and I made the statement in my opening statement, that the system isn't just overwhelmingly complex. One of the main problems for businesses is deciding on which tax structure offers the most advantages. Do you believe businesses simply have too many tax options on the table, which makes tax law more complicated?
You know, that's a good question, Congressman, and I think the law is complicated by the range of options that are available. Now, those options have grown out of more a legal concern on how to protect assets and do it flexibly. But for tax purposes, we don't have to recognize, if we didn't want to, all those different structures. We could come up with some basic ways in which any form of business would be taxed, and that could simplify things.
Okay, so one of the distinguishing features of our system is affording businesses the option to choose how to organize themselves based on what best suits their capital requirements and their management needs. Why is it that this flexibility is so important to the health of the U.S. economy?
Well, I think that from a legal point of view, being able to structure your affairs in an efficient manner is very important. The tax consequences become part of that equation. And the ability to avoid 2 levels of tax is absolutely critical in most discussions when it comes to small business. The idea of operating as a corporation, having to worry about the C corporation rules, dividends, 2 levels of tax, it's just impractical, right? Very, very few small businesses.
You yourself, you're one of the proponents of suggesting moving to an integrated tax system. Would you explain how such a system will work? And in transitioning to such a system, will we add more complexity?
Well, I think the greatest single thing that can be done for simplicity for small business is a simple cash method of accounting. And I think you can institute that without integrating corporate and individual taxes. My second proposal is that no matter which business form a business decides to use, maybe we should just have a single tax rate schedule for all business. Sole proprietors, partners, corporations, it's one business rate schedule, and so you don't have corporate income taxed at 35 and income from a sole proprietorship taxed at 39.6. And it's easy because the information's already on the tax return. Schedule C is sole proprietorships. Schedule E is S corporation. You just add them together.
Thank you. And Mr. Reynolds, my last question, I have to go to the floor now. Experts agree that to make the U.S. more competitive, we need to lower our corporate tax rate. And some have suggested a piecemeal approach to tax reform. However, I am hesitant to enact corporate-only reform because small businesses are so passionate about finally enacting tax reform. If corporate-only reform were the only option, would you consider it, or would you insist on a comprehensive tax plan?
For the vast majority of small businesses, including my own company, they are pass-through entities. And as was pointed out earlier, if you do just C corporation reform, what happens then is that a company such as mine loses the many tax incentives that would be struck during that reform, but then ends up not benefiting from the lower rates. As a result, we'd be put in a disadvantage relative to larger corporations, and frankly, small businesses have enough disadvantages. And so it would be very difficult for us to support that.
Thank you. Thank you, Mr. Chairman.
Mr. Benevolio.
Thank you very much, Mr. Chairman. You know, every year around this time, seems like my wife and I are spending a lot of time together going through receipts and documents and files and bank statements, credit card statements, to put everything together so we can take it to the accountant. Seems to me it should be simpler and more fair. Just yesterday, coincidentally, a colleague of mine on the floor of Congress were talking about the variable added tax. Colleague from New York. Dr. Maron, is it? Maron?
Yeah, Maron.
Yep. You know, it was my understanding the VAT basically taxes every stage a product will go through. For instance, from the farmer who buys the wool, to the sweater maker, to the retailer, and then to the consumer. Everybody, there's a 20% or 10%, whatever that rate is added. Is that right? Is that how it works?
It works like that, but the tax only applies to the value added at each stage. So it's the incremental value along the way that gets that rate.
Okay. Now, according to my colleague, he said we would have, that would all we'd have as far as taxes. We'd eliminate gas tax, we'd eliminate income tax, we'd inheritance tax, all these other taxes we would eliminate if we had a VAT. Is that right?
Well, obviously, so it depends on what you set the VAT rate is, but most of the scenarios I've seen would have the VAT and the income tax continue in some form. You would continue to need multiple tax streams, most likely.
Okay.
Except unless it was a very, very large VAT.
Okay. I think that's where I'm going to stop and yield back. Thank you.
Ms. Hahn.
Thank you, Mr. Chairman. Mr. Maron, I'm glad we're having this hearing today. I think we can all agree that the tax code is excessively complicated. Small businesses with profits just high enough to keep them above water shouldn't be spending thousands of dollars and hundreds of hours wading through a sea of paperwork. But a lot of the complications that we're talking about comes from tax incentives aimed at incentivizing or assisting small businesses. So, Dr. Maron, are there ways we can simplify the tax code for small businesses that encourage tax compliance but do not eliminate the advantages that small businesses have built into the tax code?
Oh, certainly. So I would like to second the call for expanding a firm's ability to use cash accounting. That if you have a relatively small business that doesn't have any reason to do fancy financial accounting because they don't have outside shareholders or whatnot, there's no reason to force them to think about a world a different way from the one in which they run their business. And cash accounting can let them just have simpler things, run it out of their bank account, fits much more naturally into the way they run their businesses, and could eliminate a lot of the compliance issues that we face.
Thank you. Anybody else want to comment on that idea?
Well, I would, Congresswoman. I think one of the problems, having worked at one point in my career on Capitol Hill, one of the problems is when legislation is drafted, simplicity is never considered, right? The whole goal is to just draft the provision the way the members want it, and nobody says, is there a simpler way to do that? Similarly, when the IRS gets a hold of the project, their goal is to weave a net that is so finely knit that not one person could get through it. And it's like a fisherman who weaves their nets so tightly that when they push the boat out from shore, the boat sinks. It's just, so I honestly believe you could get to the same point or close to the same point with a lot less complexity. And over the years, I've done a number of studies in different parts of the code, and you can get 95% of the way there with probably 5% of the complexity. It's that last 5% that really creates the mind-numbing complexity that we see.
Yes, Mr. Reynolds.
I guess what I would add is, at our survey, one of the things that showed up in our survey is that small businesses ranked the cost of compliance to the code as their number one issue with the tax code. Number two was the financial burden associated with the code. And I think that what that clearly says is that simplicity is really the objective here.
I'm going to follow up with you, Mr. Reynolds. The harbor maintenance tax is something that we collect at our nation's ports. And the point of it is it's to go back into keeping our ports and harbors maintained. And we haven't done as good a job back here in Congress of actually appropriating that money for the purpose for which it was collected, which is one of my big fights back here. And I hope to one day convince my colleagues that we ought to be spending that tax for the purpose for which it was created. And in turn, that would be an investment in our infrastructure, and the shipping companies that pay that tax would appreciate that, because that means a lot to them that these ports are maintained and dredged so that they can come in and out of there efficiently. Consequently, do you think, have you ever found in your survey or anything there would be any better feeling about paying taxes for small businesses if they felt like some of the tax was going back to help promote the small business economy?
I can only speak anecdotally. I don't think we have surveyed data on that. But I come from roughly the city of Cleveland, and I'm very familiar with the Port Authority of Cleveland. That's a very important economic development organization within northeastern Ohio. And I think that from a small business perspective and an economic development perspective, there's no question that would be a very positive thing if the money that was collected for the benefit of that port was able to be deployed by that port.
Right. But do you think small businesses would appreciate or would feel better about taxes if we devised a way to redirect some of those revenues to actually creating a better environment and economy for small businesses?
It's always good to see the results of your contribution.
Yeah. Okay. Thank you. I yield back.
Mr. Schweikert.
Thank you, Mr. Chairman. I've picked up bits and pieces as we've gone around, so I'd actually like to go take one gigantic step backwards to sort of where the basis of the hearing was hopefully heading. What do you consider to be the optimal tax system for what you and I would define as a small business? And within that, I'd like you to state share with me, is it cash accounting? Is it cash accounting with the caps that are in sort of the Ways and Means proposal in regards to 179? What would be the optimal tax system to maximize efficiency, maximize compliance, but also maximize small businesses doing what they're supposed to do, which is business?
Well, Congressman, what I would propose is what I call a simplified cash method of accounting. And when I mean that, when I say that, what I mean is inventory would be immediately deductible. Assets, capital assets purchased would be immediately deductible. Wages paid would be immediately deductible. You wouldn't have to worry about the inventory rules, the depreciation rules, a lot of the complexity in the Internal Revenue.
But isn't that almost just a classic cash accounting?
It's cash. It's exactly right.
But in the Camp proposal, isn't it cash accounting? Is it up to
$10 million.
$10 million?
But what Congressman Camp does is, while he raises the limit from 5 to 10, makes no other changes in the cash method of accounting. So, for example, if you're a small business and you have inventory, you've got to use accrual, right? And so
you'd make sure the cash accounting was for all categories.
it was real cash.
Okay.
Right.
Mr. Reynolds?
Well, first, I guess what I'd like to say is what our position with respect to Camp's work. We are very appreciative at how inclusive he's been and how much input he's taken from all quarters in putting it together. We think it's a good start. In our written submission, you'll see that NSBA has developed a set of 9 principles around what we think an optimum tax system should be. I don't have a specific position on cash accounting. How
about in something like the 179 caps?
Our biggest issue with 179 is the unpredictability of it and how it's been expired and the caps have changed.
But if it was permanent, but you're comfortable though with the capital purchases of what, 250,000?
Yeah, I'm comfortable with it.
Okay, please. Yes, please.
The SBA tells us we have something like, and their definition, 27 million small businesses. And I think of all those owners when they set foot into the business world, they had lots of dreams of what they wanted to accomplish, the business, their expertise, whatever they're leveraging off of. But having the head for accounting and these rules probably was the last thing they considered. And so the simplicity really can't be overstated, because you either make a real study of this and commit an immense amount of resources, or you just, as we've done, is just opt out to go right down the middle of the road, take advantage of virtually none of these things for fear of raising the specter of compliance issues later. And you miss out on some opportunities, but you can focus more on the business. So this simplicity and real-world impact on companies can't be overstated. I don't know what the measure or how you run it through a filter of real-world considerations when legislation is proposed, but it has immense impact and has to be carefully considered. And then sunsetting a number of these rules that stack on top of rules and stack on top of rules. I don't know how you do that, because it's just never enough time or energy to do it.
Okay, so those are the externalities even outside the tax system. Now it's the enhanced regulatory system.
And it's described when the IRS gets involved and puts in their layers and tries to build in their protections, it becomes unworkable. It's understandable why they would do it, but that's why when we try to do these set-asides and these cutouts, they have the law of unintended consequences kicks in, and ultimately is a negative, I believe, in the aggregate.
All right, Doctor.
So the one thing I would add to that then is once we have this optimal small business tax system, is to make it stable. Because if you think about, for all of these provisions, there's a learning curve in figuring out how to incorporate them in your business practices, in your accounting practices, in your tax paying practices. And that has an opportunity to become much more efficient and much less painful if it's the same rules from year to year. And if they change from every year, it just adds significantly to the pain.
Okay, so sort of a tax stability, cash avoidance of accrual, Okay, and Mr. Chairman, I'll throw you one other that it's a little more ethereal to talk about, is designing a tax system that also looks at the very aggressive changes in sort of what a small business is, and the economy, and the peer-to-peer economy, and the use of technology, many things that are micro businesses with high rates of turnover because technology allows them to do that. And my fear is some of the caps, like in the 179, others create some interesting distortions and change sort of the design of the business you would actually create. So with that, Mr. Chairman, thank you for your patience. I yield back.
Ms. Chu?
Yes, thank you, Mr. Chair. Dr. Maron, I agree that our tax code is complicated for small businesses to navigate, and I saw this firsthand as a member of the Board of Equalization in California, our country's only elected tax board. And I saw micro businesses, many micro businesses that were in trouble. 9 out of every 10 small business in this country is a micro business with 5 employees or less. And according to the U.S. Census, only 1 in 3 self-employed entrepreneurs earns more than $25,000 per year from their business. Considering the fact that a tax reform bill could be some years away, I introduced the Entrepreneur Startup Growth Act to help ease the tax compliance burden on small businesses. It would establish a self-employment tax initiative grant program at the Internal Revenue Service in consultation with the Small Business Administration to provide individuals with affordable tax preparation and business development assistance. Local organizations, higher education institutions, and local governments could run programs locally. What are your thoughts on this idea and other similar efforts to relieve the tax compliance burden on the micro business without having to reform our tax code?
So there seems to be a lot of evidence from the Taxpayer Advocate and other folks that if you have a sincere person who wants to comply with the tax code and they reach out to the IRS to get assistance, they find it frustrating and unproductive and often unsuccessful and sometimes get the wrong answer. And that's, on top of just the challenges of complying with the tax code once you know what it is. So I think we've identified a very important issue, which is, can you do things to help people to understand exactly what their requirements are and the easiest way for them to comply with them? And we are nowhere near best practices at that at the moment.
I was thinking about the small business development centers. They are very valuable entities. Of course, one of the most effective programs of the Small Business Administration, and they allow small business owners to consult face-to-face with somebody who can help them with their with all kinds of assistance. What are your thoughts about using the SBDCs to provide tax preparation assistance to small business?
So I will confess that I don't have a lot of familiarity with them. My apologies.
Yes.
I can speak to that briefly. I've found the SBDC in our area to be inordinately helpful. They've not only helped our company, but other companies they've helped, they've sent to us, and we've been a resource too. But I wouldn't look to them for any tax support or help, because ultimately we got to turn to the IRS, and many times we have an expression in our accounting circles when working that it's often dealing like with a snowflake at the IRS. You get a different answer every time. And we just went through an audit where they were looking at the issues of what's a contractor. And we had someone who worked for 5 other companies and was a contractor, and for those 5, but it was the 1099, but still ruled that person to be an employee because we wrote her a check directly. She didn't bill us directly. That 1 out of the 8 criteria, the IRS decided that was still an employee. And yet I couldn't get the SBDC to give me guidance. I shouldn't look to them. It's hard enough with the IRS. And now with their overload, getting answers out of them or doing an amended return could take months to get it back. So they're so overwhelmed. It's difficult to figure how we can do anything without just simplifying and making it simpler for everyone. Complexity is just ruining the process.
Well, let me ask for anybody in the panel, each of you expressed the need for broad tax reform, the Section 179 expensing, cash accounting, and various recommendations for rate reduction. But since it may take time for that to occur, perhaps even years, what do you think would be the most important thing to do in the short term?
Well, Congressman, I think the single most important thing that can be done without broad tax reform is to simplify the cash method of accounting. There are too many businesses that get forced onto the accrual method. And with respect to getting taxpayers help, if I can go back to that for a second, you know, I was with one of the big accounting firms, and I used to say at the end of every day that if the IRS audited every piece of advice we gave nationwide, we'd be broke. But that assumes the IRS could figure out the answer as well, and they can't. And so I think the real core, you've got to go back, you know, just do some things that would make it very simple for small business, because the complexity in the Internal Revenue Code comes from trying to compute taxable income. And if you make that simple, you make a lot of progress.
I'd say recognizing that the possibility that tax reform is on the horizon somewhere. The thing you can do most is not change much for a while. Just to give us a period of stability and predictability so that we can adjust our businesses and be able to plan in advance would be a big help.
Okay, thank you. I yield back.
Mr. Collins.
Thank you, Mr. Chairman, and thank you all for coming. I mean, I agree. Fundamental tax reform is the one thing that I believe can get this economy moving again. I own a number of small businesses, and just so you know, I do my own taxes. I've read the tax code. I know it inside out. My tax return was 69 pages. I have 8 sub-S's and 4 LLCs in all types of industries. So I do know, and we'll talk about cash accounting in a second. But first of all, the one thing that hits me when I do this is every dollar I send to the government is a dollar I can't invest in my business. So those who say on the other side, let's just tax corporations more, tax, tax, tax. Every dollar I send to D.C. to be wasted is a dollar I don't reinvest in my business to grow and create jobs. That's the fundamental thing. The other rhetorical comment I'll make is it's insanity that we're taxing all my companies and small businesses at 39.6%. But it's more than 39.6%. I need to remind the folks on the other side. Under the tax code this year, I lost every exemption. I get no personal exemptions, no family exemptions. And because this income is flowing through my personal tax return, I lost 20%, or no, 80% of my itemized deductions. With the complicated tax return I have of 69 pages, I took the standard deduction because I lost 80% of my itemized deductions. So my tax rate's not 39.6. It's 39.6 plus what happened with the loss of exemptions, every one, 0, and losing 80% of my itemized deductions. That's how crazy the tax code is and how it disincentivizes or penalizes us. We can't invest in our business. So that's my rant. But by doing my own taxes, a couple of questions. First of all, and I'm assuming you all agree, you can give me a quick yes or no, it doesn't make sense to do sub-S and LLCs at 39.6 and big corporations at 35. Do you agree?
No, as the pointy-headed think tank guy, I'll say it's complicated.
I don't know, I kind of asked for a yes or no. Let me ask you a yes or no. Let me ask you, aren't we the only country in the United States in the world without a VAT?
Only significant country, yes.
In fact, the only 3 that aren't are African countries that don't have a GDP. I mean, every developed country, every industrialized country has a VAT.
Except us, yes.
And if there was a country that could completely replace their taxes, income taxes, with a VAT, wouldn't it be the country where we are 4% of the world's population and 25% of the world's GDP? Isn't that the one scenario where it could work? 4 and 25.
So I haven't seen a VAT proposal that would do that.
But wouldn't you agree we are the one country that could at 4 and 25? You can't do it if you're 2% of the world's population and 1% of the world's GDP. If you're China, you could never do something like that. 4 and 25, that math is staggering, which makes you wonder how it is we're not churning money left and right. Maybe you don't like yes or no's, but anyhow.
Yeah, no,
let's
the curse
move on.
being in think tanks.
All right. The deductibility, one thing I've noticed is you can't offset passive losses unless you have passive income. And a lot of companies generate what you could call passive losses or R&D tax credits, and an investor and owner can't take credit. Would you suggest eliminating that requirement? That's something simple we could do to say the requirement that you have to have passive income to offset passive losses. It makes no sense to me.
It is something simple that could be done. In fact, it was put in the law in 1986 to raise revenue. It departed, at the time it was enacted, it really departed from the concept of tax expenditures because it says, we understand you've got a loss. We're just not going to let you claim it.
And if you can't claim it, then you're paying higher taxes and you can't reinvest the money in your business.
And you've got a loss. You've got a real loss.
That's
that
right.
You can't
and
claim.
you can't use it.
Yeah.
All right, so cash accounting.
Yes, sir.
Here, be careful. I mean, because here's the nuance there. If I'm a small business and I use cash accounting and I write off my equipment, if I write off my inventory and I got a contract that's going to cross the year, so I just had a huge write-off because the inventory's in my shop, I'm not going to bill it until next year. I'm not going to get paid the next year. And I have a huge loss. And there's restrictions on how so I may have no income. So if I have no income, I don't take advantage of any of the marginal brackets, none of them.
Right.
All right, so now I go to the next year, I ship this thing out, I make all this money, and again, depending on how your carry forwards work, you could find yourself, you lost those marginal brackets forever. Now you go into 39.6, you lose all your exemptions, you lose 80% of your deductions. I could see where cash accounting would not be good.
And what I think, Congressman, what you're describing is why you would not want to manipulate your income, particularly from one year to another.
It's not manipulating to have a big contract.
And I understand that. But if you want to take advantage of the brackets, you'd have to make sure that you didn't spend every year trying to zero out your income. And that's what people get concerned about in the cash method, is somebody at the end of the year.
You can't change when your customer needs the product. And if you're shipping it in January and you're building it in December, I mean, that's not manipulation. That's just called, it takes me 2 months to build it, so my inventory cost is in December, my revenue's in January. I lost, that person loses all the benefit of their marginal brackets.
They do.
Okay. Thank you, guys. I could go on, by the way.
Well, I'm impressed, and you're forcing me to reconsider my line that since 81% of small businesses tend to hire tax preparers, another 10% use both software and a tax preparer, the other 9% of the returns are completely wrong. So I've got to amend that now that you're doing your own return.
And I don't use software either.
I'm impressed. Wow.
Schrager.
Thank you, Mr. Chairman. Yeah, well, I'm proud I don't do my own tax returns. I got better things to do. I guess a question generally, I don't know if it's possible for you to answer, but the discussion on the value-added tax is interesting. The comments by my colleagues, I think, are on point. So what would be the rate that you'd have to have for a VAT to completely replace all business taxes, both corporate and sub-S, LLC, partnerships, all that? What would that rate have to be? Maron, do you have any clue or any guess?
So I hesitate to make up a number on the fly, but I suspect it would be a 2-digit number beginning with a 1.
Okay. Okay. So, Mr. Enders?
Well, one of the points to the VAT tax is not what it is, what it's going to become, because it's these hidden and moves below public awareness many times. But what I do like about anything that's somewhat consumption-based is this vast underground economy that pays zero taxes. And when you consume and you buy these, whatever you buy, you're paying in. And it's got to have some unbelievable effect of broadening the base, the tax base, to get the consumption. And but the slippery slope of taxation, I understand the arguments against it, but there's got to be something, because in our life, in our business, I just see, if you're a business, you either have to play by the rules or you don't at all. And if you're not even just consumers or business, there's wonderful ways of just living under the radar and paying nothing. And it's a travesty. It's a very expensive one.
To your point, the Oregon Department of Revenue, when I was in the state legislature, did some work and was able to model more with some sort of consumption tax, how much revenue, in reducing income taxes dramatically, corporate included, capital gains, how much money they were able to gain from that underground economy. It was pretty staggering, actually, to your point. It'd be second, like a follow-up then would be, what business types, well, would object to that? Wouldn't matter if everyone was treated the same, I assume. So what businesses, however, might object because they end up paying a little bit more under VAT than their current forms? What businesses would object to that, particularly small businesses? Mr. Cotter?
Well, the thought that comes across my mind is it would depend on the amount of effort to comply. If the forms were relatively straightforward, and then I think most small businesses could handle it. But if it got complicated, they would not. The other point I'd make on the value-added tax, and I'm sure Mr. Maron is more knowledgeable about this than me, but I think many countries that have implemented a value-added tax still maintain an income tax. And so...
Well, I was talking with regard to businesses.
Yeah, no, I know. Yep.
These businesses, to simplify that, make it straightforward, avoid the underground economy. Everyone pays their fair share, if you will, ostensibly. And I just didn't know if we pick winners and losers all the time here with different tax credits and deductions and stuff, and we're probably not the smartest group in the world to pick winners and losers. So it'd be smart, I think, just to simplify things. And that's one. The other way to go about it is look at a set rate. Say you got rid of all the deductions. Say you got rid of every single deduction, tax credit. And I know sometimes it's tough to tell if it's a deduction or a change in, whatever practices. But say you got rid of all that. Is there an appetite in the small business world, big business world for that matter, business world in general, for a set tax rate for all business income and avoid all this deduction, save a ton of money in compliance? Simplicity would be the name of the day. What would that rate end up being? Mr. Reynolds.
I'd say that there is some appetite for it. Our organization supports, for example, what is referred to as a fair tax, which is essentially that, a flat rate. Very simple.
It's also become evident to me in my years in business that businesses really don't pay taxes. It's all paid through the consumer, and it's just passed on. It's an interesting discussion, but we really don't. It's a flat deal. It affects everybody equally. It's a little more fair than those who can play the tax system better, put more energy into that as opposed to growing the economy and growing jobs. Fair, simple. What's not to like?
Mr. Maron?
Yeah, so a lot of folks have taken a crack at writing down tax reforms like that. So Bowles, Simpson, Domenici, Rivlin, other folks. What's the right way to put this? In a room of well-meaning people who aren't constrained by the political process too much, it looks like you can write down plans where you get down to about a 28 or 27% rate across both corporate income and individual income, which then applies to pass-throughs. As we saw from Chairman Camp's effort, that if you try to do it in a way that faces more political constraints, you start ending up with rates that, begin with threes and that have some of the preferences maintained.
Okay. Very helpful. Thank you, gentlemen. Yield back.
Mr. Luke Meyer.
Thank you, Mr. Chairman. And Mr. Collins, well done. I'm impressed. I was in the banking business for about 35 years, and I did our bank's taxes myself for about 25 years, and I finally got to the point that, this is not going to work very much longer. But just so you don't fulfill the old adage about the lawyer has himself for a client. Gentlemen, thank you for being here today. And yesterday I had in my office a gentleman who has a string of Taco Bells, I think 25 of them, matter of fact, and he was talking about the definition of full-time employee and how that's impacting his business from the standpoint of what goes on with the Affordable Health Care Act and how he manages the rest of his employees with all their things. And, of course, the Affordable Health Care Act has been deemed a tax by the Supreme Court in their enlightened wisdom. And so I was just kind of curious as to your thoughts about that, the impact, the tax implications that you see, positive, minus, because I know it was something that was top of mind to this gentleman. Mr. Reynolds, I know you're a small business guy. What would be your comments?
Speaking just for my own small business, I have 38 full-time employees. We're in the software business, and that for us has not been a specific issue. associated with it. It does have a significant impact, speaking from an SBA's perspective. It has very significant impact, particularly on businesses that are in retail and food service, which are perhaps not the majority, but a very large segment of small business. And to rearrange, to have to be forced to rearrange your workforce in order to deal with that is suboptimizing the business and hurting the economy.
You know, one of his concerns was, you know, he had a group of employees that were in the management area, and then he had the other group that was in the basically the 28 to 34 hour per week range that were very important to him. They were the supervisors, they were the shift supervisors, the folks that made sure the rest of the folks did their job. They were the ones who were teaching the ones who were in the 12 to 25 hour range, and it was very important. And now this group of people that he relies on to actually manage his the operations, so to speak, of his business, were going to have to be tinkered with their hours, and it's really made a hardship on him. Any of the other folks on the panel have a comment with regards to that?
We have paid over the last 15 years. We've paid 100% of our employees' health insurance, and probably had too many bells and whistles going back to the .com era. But we have our insurance firm, just through having to, just the way things are structured and being able to, they've explained to us that they've had to raise our rates 40% just because of the fact that the other obligations they have to now hit. And that hits us where we have to start scaling back what we were once doing at 100% and dropping off of many of the dental, the vision, all the things that we had before. We're not big enough to be hit, and we don't have the part-time labor issues, but that was one practical impact on our company.
And I'd say Mr. Endres' comments are similar to comments we're getting at the tax center. Small businesses, that many of whom had traditionally paid 100% of the health care costs, are dropping the programs. They're going to raise the compensation, which will be taxable to the employees, send the employees to the exchange, and just get out of the business of providing health care. It's gotten too expensive and too complicated, even though technically the Affordable Care Act doesn't apply to employers with under 50 employees.
Another quick question for you. It's kind of interesting. The SBA has a definition of a small business as anybody 499, basically 500, less than 500 employees, yet the healthcare law has, their definition is under 50. Where do you see this playing out? Is this a problem? There's no consistency here. Anybody have any comments on that?
There are dozens of definitions of small business sprinkled throughout the law, and not only the Affordable Care, but the law in general. For NSBA, I would say that while that is our definition, in terms of our membership, well over 90%, I think, are under 50 employees.
So would you support something, for instance, to change to the health care law that would raise it to 500 so that it would be consistent with everything else?
I'm not sure I can answer that knowledgeably at this point, but I can certainly get back to you.
I see my time's expired. I'll yield back. Thank you, Mr. Chairman.
Mr. Schneider.
Thank you, Mr. Chairman, and thank you to the witnesses for being here. Professor Cotter, like you, I started my career at Price Waterhouse, not Ernst & Young, but I started on the consulting side. And after 30 years, or almost 30 years of working with clients, I understand one thing in business, in strategy, or in operations: complexity has associated costs. And I think it's the complexity of the tax code that leads us to an urgent need for comprehensive tax reform. But within that, I introduced a resolution, bipartisan resolution, calling for the Congress, the House of Representatives, to make sure that we deal with both corporate and individual, because 90% of our operating entities are these pass-through entities. If, however, Congress chooses to focus strictly on the corporate side and lower the rates in such a way to get to the point, as the Camp proposal does, of eliminating so many of the tax expenditures, so-called expenditures, and small companies have to move from their old structure, LLC, S Corp, whatever, to a C Corp. What's going to be the cost on those companies to do that?
Well, I think the restructuring costs would be substantial and frankly very frustrating. But you know, Congressman, the proposal I've got talked about a little bit earlier of a single business tax rate schedule is designed to deal with this issue. In other words, if all you wanted to do was reform business taxes, right, and you didn't want to worry about the mortgage interest deduction and the state and local tax deductions and the phase out of the personal exemptions, change the rules for all businesses with respect to depreciation, inventory, whatever you want, and then apply a single business rate schedule. So a sole proprietor would pull out of their individual return their Schedule C and subject that to tax at the business rate schedule, not at the individual rates. And that way you could get corporate business reform. I mean, you changed all the business tax rules and tax all businesses at the same rate without having to work your way through the complexity and the difficulty of dealing with all the individual changes.
Any others? Dr. Maron, you have thoughts on this issue?
Oh, just so I must admit, I view it as politically unlikely because the bumper sticker will be so terrible of reducing taxes on multinationals and raising them on small businesses. But I mean, but in the hypothetical, you'd have exactly what you described, which is that you'd have higher tax burden on the pass-through entities. Some of them would choose to bear that and remain in the system as it is, and then some would bear the change costs as just described.
Mr. Andrews, I'll turn to you for a second. You talked about making the choice to stay below 30 employees because of the complexity of the tax code. If we had a more simple system that allowed you to grow your business, how big would you have grown? What would have been the impact over your business?
Well, it's difficult to say that. It's more because of the uncertainty of the tax code and what the next rule is going to be and the next threshold. I mean, we've got limitations on definition of a small business that sometimes it's 11 people, sometimes it's 22 or 30, 50. And so you never quite know what the rules will be. It's just safest to stay around 30 and then outsource the rest, leverage off of other resources, just be less people intensive. And it's unfortunate because it has a real impact on hiring. And I think a lot of our tax law has built a huge offshore industry of offshoring a lot of jobs. And because of this concern, we don't have to use people in this country anymore with all the uncertainties and vagaries of how they're taxed.
Sorry, I'm going to take back my time because we only have a minute. But you know, it's not just complexity. And Dr. Maron, you touched on this. It's certainty. It's the sense of every year it's going to change. If we could have certainty, let's say a 5-year confidence level of what the 179 deduction might be or what the R&D credit might or might not be, what impact would that have on our economy and the ability of small businesses to start making decisions, long-term decisions, and investing in people or equipment or the things that will drive the economy?
Yeah, if you think about those provisions, they do two things. One is they reward firms for undertaking those activities that we think are beneficial. And then the other thing it does is actually provide like a carrot to think about, hey, you're going to get a reward if you do this, and they actually act as an incentive. And we're in this unfortunate world where there's this uncertainty and they expire and whatnot, that we're missing a chunk of the incentive effect. And it's sort of like an after-the-fact sweetener rather than something that firms can be confident will be there. But if we can go to your scenario, if we know it's in place for 5 years, then firms can put together investment plans and R&E plans over 5 years, recognizing that, putting it in their spreadsheets, and having it as an incentive for them to do more of it.
And I say I'm out of time. My closing remark on that point is oftentimes if Congress waits until December, it's rewarding people for making decisions they would have made otherwise and not providing the incentives. So I think the importance to have it laid out is critical.
Or in this case, April or May.
Right. So with that, I yield back. Thank you.
Mr. Payne.
Thank you, Mr. Chairman. Mr. Andrews, looking through your testimony, you mentioned that the deadline for the corporate tax return should be extended beyond the current cutoff date of March 15th to add a few more additional months. Can you be a little more specific in terms of the time frame you feel it would take to produce a quality corporate return?
Well, our tax and financial data comes pouring in through January and into early February. We have a March 15th filing deadline. Our accountant needs 3 weeks to prepare the return. He's got a crush of every one of his clients have to be done all at the same time in 3 weeks. That gives us a window of about 2 weeks to work on it and get it cleaned up for our accountant. And so our business pretty much just stops while we attend to it. There are some years we've just skipped over and just let it fly, and if we missed opportunities to deduct and we missed things, so be it. We're just too busy. But if we had pay the taxes as they're due, but if we had several more months, I don't know, September 15th, taxes would still be paid on time, but we would have the time to do a much higher quality return, working closer with our accountant when he has time to review the prior year's fiscal data and do a better return.
Anyone else like to take a stab at that?
Well, I don't know the statistics, Congressman, but there's a very high percentage of businesses that are not as diligent as Mr. Endres, and the automatic reaction is to file an extension. The problem with filing an extension is you have to pay your taxes or you pay penalties. So you pretty much have to have a good idea of what the tax liability is. So I would think if you could push the due date out another month to 2 months, you'd probably have something that's much more reasonable.
Okay. Thank you. Thank you, Mr. Chair. You bet.
Well, I want to thank all of our witnesses for being here today. Taxes have a profound effect on the operation of on small businesses. And tax provisions, very often, they drive the decision-making process when it comes to businesses, purchasing, expansion, hiring, whatever the case may be. But with that, we're going to stay very engaged in this. The Small Business Committee is. It's an important issue to all members on the committee. And with that, again, I want to say thank you for coming out, and some of you coming so far to be a part of this hearing. And I would ask unanimous consent that members have 5 legislative days to submit statements and supporting materials for the record. Without objection, that is so ordered, and with that, the hearing is adjourned.